What is money market and where does it exist? Hello everybody, I'm a learning partner in investment banking, hedge funds and global financial markets. I'm Sushila Hariharan, and if you're interested in a career in any of these fields, do subscribe to my YouTube channel where we provide content-centric, research-focused videos on topics that could be asked at your interview with a global investment bank or with a global hedge fund which have operations and processes right here in India as well as in many other countries of the world. So let's understand what is money market. If you are going for an interview with one of these firms, a question that could be asked is, what is money market? A money market is a market where short-term debt instruments are traded. This is a good enough answer. Let's make this answer a great answer. Money market is a market where short-term instruments are traded between institutional investors. That's a great answer because retail participation in money market instruments is very minimal. And if you want to make that an awesome answer, then let's go ahead and say money market is a market where short-term instruments are traded by corporates and institutional investors to manage their short-term liquidity needs. This makes a comprehensive and an awesome answer for your requirements for understanding what is a money market. Money markets are literally OTC markets. That means they are over-the-counter markets which do not have a centralized trading platform. Alright, so unlike the stock exchange where all the trades have to be routed through the stock exchange and the stock exchange does the discovery of counterparty for the investor, in the case of money markets are OTC in nature. They are decentralized trading. Decentralized trading means the trade that takes place in money markets is literally dependent upon bilateral trades directly from counterparty to counterparty, or they can also go to the next level, which is from institutional investors to dealers, and dealers then offload their position to another counterparty. So money markets are OTC markets where short-term debt instruments are traded by institutional investors to manage their short-term liquidity. The most commonly traded instrument in money markets is treasury bills, and treasury bills are issued by the government of the country. In India, we call them as T-bills, T-bills, and the maturity of treasury bills is typically less than 1 year. In fact, the maturity in some countries of treasury bills is as low as 7 days. That means the government is actually borrowing just for a period of 7 days. The second kind of money market instrument is commercial paper. Commercial paper is issued by corporates, not by government, okay? And they are acronymed as CP or commercial paper. These are issued by companies who need short-term working capital requirements, who have short-term working capital requirements, and therefore they issue commercial paper to different investors. Since this is a short-term instrument, the maturity of the instrument typically is between 270 days or 360 days. It depends upon the country in which the issuance has taken place. Now here's the different thing about commercial paper. How does it differ from treasury bill? A treasury bill is issued by the government and therefore has sovereign risk credit rating. But commercial paper is issued by different corporates with different ratings, and hence it's mandatory that a commercial paper must be having a credit rating. And finally, you have certificates of deposits, acronymed as CDs, which are issued by banks and other financial institutions, including insurance companies, to manage their requirements. So we have treasury bills issued by the government, we have commercial paper which is issued by corporates, and then we have certificates of deposits which are issued by different banks and other kind of financial institutions such as insurance companies. So these three categories of instruments dominate the money market. You of course have different types of trades like repo trades, etc., which will be discussed in another video. So suffice to say that money markets are those markets wherein the instrument is issued by way of debt, so there is a contractual obligation. It is issued in the by institutional investors or even by the government to manage their short-term requirement. The maturity of the instrument is less than 1 year, and finally these are traded in the OTC markets.